Mid-caps clock gains even as the frontline indices oscillate in a narrow band. Metals and energy eke out gains while FMCG and financials drag.
Auto industry players see passenger vehicle sales growing only 1 to 2% in FY26, far slower than earlier expectations. SUVs, though, will continue to grow faster, and two-wheelers and three-wheelers, along with commercial vehicles, are expected to grow mostly in line with what analysts are expecting.
Hindustan Unilever CEO Rohit Java says the macros are turning in favor of consumption, with rural stronger than earlier years and an urban pickup in the offing. He also strikes an upbeat note on the potential of recently acquired digital beauty brand Minimalist.
Mahanagar Gas Managing Director Ashu Shingal says importing more LNG from the United States should not be a worry for India, as Henry Hub gas prices are more stable and often lower than supplies from other sources.
Good afternoon. You're watching us here on Halftime Report. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Manglam Malu, and joining me after a while is Hormaz Patakia. So it's the full strength on Halftime Report. Hormaz, you return from a holiday. What do you bring with you? Good gains for the mid-cap index.
Oh yes, that is what I was mostly anticipating for. I was intending to bring some of those gains for the broader markets after the sell-off that we have seen.
Just out of curiosity, did you travel abroad or did you travel in India?
No, most of it, all of it in India.
That explains why DII flows are still strong. Had you traveled abroad and come back, maybe got some FII flows with you as well.
And that also explains why a lot of the travel stocks are up in today's session as well. But indeed, and that's been the story of the last few trading sessions, for at least for the benchmark index, because the Nifty is holding on to those levels of 22,800 on the downside. Similar case today as well, a low of around about 22,830 in today's session. 22,814 was yesterday's low. Rebounded from those levels yesterday. We rebounded from those levels today as well. Interesting to see if we could hold on or even see a recovery in the second half of the trading session, specifically because it's the weekly options expiry. But as Manglam was mentioning, the day belongs to the broader markets. The sell-off has been significant, and so is the recovery as well today, being more pronounced as compared to the broader market, as compared to the benchmark indices. The mid-cap index up 0.8%, the small-cap index up almost 1% now, both of them at the high point of the day. But the activity, though, morely in specific stocks.
In specific stocks, a bunch of them actually, in fact, if you look at it, a lot of the stocks which are gaining in just the last few odd minutes. Amara Raja Batteries, just pull up the intraday chart on that one. It's up nearly 8%. We're seeing some traction in names like ABB India as well. The stock saw a decent up move after their results, saw a big down move after the management commentary coming in, and now it's picking up once again. And along with ABB India, a lot of these other capex names as well. We have Cummins, which has moved higher to the higher end of today's trading range. IGL continues to do well. So MGL, we had the management speak about no worries coming in with regards to any sort of change. Henry Hub doing better for them, but IGL doing well. How much of that is on account of, the change in Delhi and the impact of that in terms of any sort of policy expectation is something that we'll keep an eye out on as well. But be that as it may, auto stocks not driving as fast as one would imagine, though they're off lows, but largely sluggish when it comes to the auto space. Hormaz?
Interesting developments that have come in from that CIAM conference as well, right? Because there were earlier expectations that they were expecting the passenger vehicle sales to grow by 3 to 4% in the next financial year, but now they've trimmed it down to 1 to 2%. So expecting further headwinds there, and they've also cited multiple reasons as to why they're expecting this growth to be slower, and that includes factors like weak demand. They also cite affordability concerns, declining entry levels car sales, a fading post-pandemic surge. So multiple issues. Then SUVs have been growing consistently, but the entry-level car sales have been a struggle, and also including factors like inflation, rupee depreciation compared to the US dollar, and also geopolitical uncertainty. So as a result of which, while FY25's growth is likely to be absolutely flat compared to last year, FY26's growth will only be between 1 to 2%, at least for the passenger vehicle segment. Now, what they're also estimating for the two-wheelers to be a bright spot compared to the passenger vehicles. 8 to 10% growth is what they're anticipating here in FY26. And Nomura, in its note, also mentions that most of the companies already had a very cautious outlook on their passenger vehicle sales for next year. That on the flip side, TVS Motors is expecting to grow around 9 to 10% on an overall basis. The entry level, though, is expecting to grow only between 4 to 5%. The Hero MotoCorp, too, mostly catering to entry level bikes, that is expecting to grow around about 7 to 8%. Now, for the commercial vehicles, Tata Motors is expecting a 4% growth. Ashok Leyland for the truck segment is expecting a single digit growth, while for the buses, it is expecting a double-digit growth. You see, most of these names under pressure today, barring Mahindra and Mahindra, that has recovered from the lows of the day. But be that as it may, stocks like Maruti, Hyundai, Tata Motors too has seen a significant correction from the top. Those continue to remain under pressure.
All right, so those are a bunch of stocks on our radar. Let's move on to an important one, a deal inked between ONGC and British Petroleum to collaborate on oil and gas exploration and production. Manisha Gupta joins in. In fact, she caught up with ONGC's chairman and managing director Arun Kumar Singh on the sidelines of the India Energy Week 2025. He focused on the contours of that partnership. So all of you who are wondering what exactly does this partnership entail, hear this out.
The BP tie-up is basically for enhancing our production from our biggest reservoir called Mumbai High. So there, somehow their understanding of such kind of reservoir is seemingly better than, because of their size and the experience of the world, is better than us. So this tie-up we did basically to enhance our production substantively. It is not a incremental small increase. We are looking at it almost, to almost near, the offer itself is 60% plus. So it is substantive demand, a substantive increase in our production from Mumbai High. With that aspiration, we got into the tie-up with BP.
There's the management there of ONGC, but a segment that has seen significant selling pressure from the higher levels, specifically within the broader markets, are the PSU names. And amidst all of this selling pressure, CLSA has upgraded NHPC to a high conviction outperform. Remember, it has added multiple such stocks into that list, be it Zomato, Indus Towers, and NHPC now comes into that list. The stock at the highest point of the day, and Vivek is joining in with more details on that. Vivek, good afternoon.
Well, that's right. So it's an upgrade from a conviction to a high conviction outperform. So when you're talking about CLSA, what have they done? They've marginally lowered the target price from 120 rupees a share to 117 rupees, largely factoring the higher capex and cost overruns that the company may see. But remember, we had the management on the channel yesterday, and they did give some positive commentary in terms of commissioning of key projects. The other thing that CLSA notes is that the 25% stock correction gives investors an opportunity to go ahead and accumulate a very inexpensive utility stock at 12 times FY27 price to earnings. Key catalysts, according to CLSA, number one, the start of the Parvati 2 hydro project that will significantly boost the regulated equity, and this is expected to start by March 2025 itself. Also, the company's entry into shorter duration regulated pump storage projects is also seen as a positive, and also the likely 2x growth or jump in regulated equity from FY24 to FY28 as large projects lead fruition is something that is expected to drive the EPS. So the stock price correction, multiple projects coming on stream, as well as entry into shorter duration projects is something that CLSA finds quite attractive, which is why they've upgraded the stock further to a high conviction outperform rating.
All right, Vivek, thanks a lot for that. The stock on that note up around 5%. In fact, the other one which is gaining is Zomato for the second consecutive session today. Opened lower from lows. It has seen some purchase, saw some short covering in yesterday's trading session, fresh long additions as well, and now has moved higher. Every time Zomato moves, let's keep an eye on Swiggy as well. Yesterday, after many sessions, Swiggy went above its IPO issue price of 360 rupees, and currently it's holding mildly above that, closer to yesterday's close. So we'll see with the up move that we've seen on Zomato whether Swiggy follows that or not. But with that, let's move on and tell you an important update. The India's business news leader is now just a click away. We are introducing to you the CNBC-TV18 all-new app, by which you can get instant access to breaking news, you can get in-depth articles and financial world updates, all of them at your fingertips itself. You can download this app from either the Apple Store or the Google Play Store, or what you can do is that scan the QR code which comes up for you on your screen, and thereafter you can get the link to download that app. The QR code comes up for you.
Back with us here on Halftime Report, and the markets continue to remain where they are. 22,900 is where the index is, and some flashes on your screen as well with regards to Tata Power. And there's some visuals coming in on your screen. This is live from New Delhi for the swearing-in ceremony of Rekha Gupta, who becomes the 4th woman Chief Minister of Delhi. A lot of the BJP top brass, a lot of the NDA allies also in attendance. You can see there Chandrababu Naidu on your screens, Amit Shah, Rajnath Singh, JP Nadda, all of them in attendance. A lot of the other cabinet ministers will also be taking oath in New Delhi today. Remember, Rekha Gupta was elected the leader of the BJP Legislative Party yesterday evening, and she is also a first-time MLA, and now she'll become the 4th Chief Minister of Delhi after Sushma Swaraj, Sheila Dikshit, and of course Atishi, who had was sworn in after Arvind Kejriwal had resigned ahead of the elections in Delhi. So you'll keep an eye out on more developments there coming in from Delhi. A lot of the cabinet ministers will also be sworn in, along with, of course, Rekha Gupta, who will be sworn in as the Chief Minister. But moving on to corporate conversations, then Arvind Smart Spaces is what we are focusing on, because the company has bought a 150-acre land parcel in Ahmedabad, where they plan to develop a project with an estimated sales value of 600 crore rupees. Now, to discuss this and more, we are being joined by Kamal Singhal, who is the MD and CEO at Arvind Smart Spaces. Mr. Singhal, good afternoon. Thank you for joining in. Firstly, this 600 crore development project that you have acquired this land parcel for in Ahmedabad, when do you expect to launch that? And what also, if you could tell us more about the internal rate of return for this project for your company?
Well, good afternoon. Yeah, you're right. We just acquired another project this year in Ahmedabad, which is horizontal one, with a top line of around 600 crores. It should be launched somewhere in Q3 of this coming year. And IRR, normally we have a threshold of around 25 to 30% IRR from any project that we take in our portfolio. And this project should not be any different from that. So we expect that we should be earning something like 25% EBITDA level IRR from this.
All right, 25% IRR on this business. What about launches? When we last spoke, you did have a target for this year, and of which about 2,000 crore in terms of launches were remaining in FY25. Where does that number stand at in terms of the launches that you've done so far, and what's remaining? And are you on track to meet that guidance?
Yeah, we are broadly on track on 2,000 crore rupee of total launches for the year. In fact, we have already launched quite a few, and at least 700 to 800 crores worth of projects are yet to be launched in the remaining part of this year, which is just about a couple of months from now. There is at least one project in Bangalore, which is a large one, around 300 to 400 crore rupees of top line, which we are hoping to launch towards very end of this year. There are chances that it might slip into early next quarter, but otherwise it's on track. Even next year is looking very exciting from launch point of view, where we are hoping that we should be able to launch something like 2,500 to 3,000 crores of new projects next year as well.
So bookings this year stand to cross 1,500 crores, and unrecognized revenue, where does that number stand at when we speak to you, say, at the start of the next financial year? Where would those numbers be according to you?
Sure. We hope that we'll grow by 30% on the fresh sales. In the first 9 months, we've already touched almost 900 crores. We are on course to touch something like 1,400 to 1,500 crores this year. As I just mentioned, one project in Bangalore on approval side is running a little late. We are hopeful that it should be launched, and once that happens, we should be able to comfortably touch 1,500 crores. There is an outside chance that this slips into next quarter. That's the small impact which we might see, but otherwise we are on track to touch 1,500 crores as we expected in the beginning of the year.
What about the Mumbai metropolitan region, Mr. Singhal? You had also entered this territory with that 1,500 crore horizontal township project in Khopoli. What's the status on that?
Sure, yeah, it's a very exciting project for us. I mean, with this, we now formally enter the MMR market. This is going to be a very, very exciting horizontal, large, little less than 100-acre project in Pen Khopoli. It's a beautiful location for an outhouse, for a second home, for a recreation home, etc. And this project, we are hoping that it should be launched somewhere in the middle of next year with a top line potential of around 1,500 crores.
Right. Any more, projects in the MMR Mumbai region? I mean, what are you looking at, if at all, in here? Is it JV, outright, or redevelopment? What's your mode?
Yeah, sure. Once we've entered Mumbai as a market, obviously it has to be very deep for us. And in that sense, we are very focused on three kind of projects. One is the horizontal one, where we bring a lot of expertise from our Ahmedabad and Bangalore experience into this Mumbai as a market. The other is society redevelopment. In fact, we are in close discussions with a couple of such societies, and one of these projects should be getting announced very soon. That's our expectation. At the same time, we're also looking at medium-sized outright and JD project when it comes to vertical apartment kind of projects. So these three are the segments that we are very focused on. And in the coming months and quarters, you will see quite a bit of action happening. We definitely want to make this as one of our major markets after Bangalore and Ahmedabad. And in our 10,000 crore dream, this is an important piece. MMR is an important piece, and we are working around it. This is one big announcement that we made on our entry into this market, and many more are expected to be following in this year.
By when do they happen? Is there anything that you have zeroed in on, or is there something that is on the anvil for the MMR region?
Oh yeah, quite a few things are at a very advanced stage. As I said, one of the society development is almost at the last very stage of getting finalized. So we should be able to come with some good information and news about this as well in the coming weeks.
And where do collections stand for the first 9 months, and what is your target for this year?
Collections are pretty healthy. In fact, last year on financial side has been absolutely great. Collection for this quarter has been 229 crores, which is up by 18%. And for the year, we've already collected 725 crores, which is 10% up as compared to last year. We're very hopeful that this year we should be touching somewhere around 1,000 crores, which was the expectation as on starting of this year.
All right. Thanks a lot, Mr. Singhal, for joining in. 1,000 crores of collections, 2,500 crores worth unrecognized revenue for this year, along with 1,500 crores of bookings is what you're targeting for this year, with an outside chance of that slipping into Q1 FY26 due to some delays in Bengaluru as well. With a focus on the MMR region, we'll keep an eye out on how this business pans out for you. The street likes it. Stock up 6%. Take a short break. On the other side, we get you more on the markets and stock-specific action.
अपने कर्तव्यों का श्रद्धापूर्वक और शुद्ध अंतःकरण से निर्वहन करूंगी तथा मैं भय या पक्षपात, अनुराग या द्वेष के बिना सभी प्रकार के लोगों के प्रति संविधान और विधि के अनुसार न्याय करूंगी। मैं रेखा गुप्ता ईश्वर की शपथ लेती हूं कि जो विषय मुख्यमंत्री के रूप में मेरे विचार के लिए लाया जाएगा अथवा मुझे ज्ञात होगा, उसे किसी व्यक्ति या व्यक्तियों को सबके सिवाय, जबकि ऐसे मुख्यमंत्री के रूप में अपने कर्तव्यों के समय निर्वहन के लिए ऐसा करना अपेक्षित हो, मैं प्रत्यक्ष या अप्रत्यक्ष रूप से संसूचित या प्रकट नहीं करूंगी।
That was Rekha Gupta, the fourth woman Chief Minister of Delhi and the first female Chief Minister for a BJP-ruled state or union territory at present. The suspense over who the Delhi CM would be was broken yesterday as she was elected as the leader of the Legislative Assembly, and now she's taken oath as the Chief Minister of Delhi. We wish her well. Along with her, there would be others also taking oath as ministers of the cabinet. We have Parvesh Verma, Manjinder Singh Sirsa, Ravindra Kumar Indraj, Kapil Mishra, Ashish Sood and Pankaj Kumar Singh, who have been appointed as ministers in the Delhi cabinet. That is, those are some pictures coming in from the Ramleela Maidan in Delhi, where the ceremony is taking place in the presence of luminaries like the Prime Minister himself and senior leaders from the NDA. But that's about political developments out here. Just keep an eye out on the market, though. The mid-cap index is doing extremely well. Perfect time to get you an update from the F&O space, largely because it's a Thursday, which means it is weekly options expiry. Where are we headed today? The indices, if you look at the Nifty and the Nifty Bank, you would see the Nifty Bank is the one which is taking a bit of a blundering in today's trading session after supporting the frontline index yesterday. the mid caps doing well. And the reason for the mid caps doing well is now the street seems to have made up its mind on Nifty having made a bit of a bottom or in the process of bottom formation between 22,700 to 22,800. Over the last 3 or 4 trading sessions, the day's low on the Nifty has been contained. Yesterday's low on the Nifty was 22,815. Today's low 22,813. And over the last few previous trading sessions as well, the Nifty has been making slightly higher lows. The Nifty bank's weakness could be explained by technical reasons. It closed above the 20-day moving average yesterday. Now it's below that, so that's something we'll keep an eye out on. And now that Hormaz is back, let's start our options class once again. Hormaz 22,900. Imagine selling a straddle out there. What is a straddle? A call and a put together. So we're looking at the 22,900 put, which has a premium of 30 rupees. 22,900 call comes up for you. That has a premium for almost 30 odd rupees as well. Moments ago, this was 35, 40 rupees. So if you sold both the calls and the puts and hope that the market stays in a bit of a range, the range would be 22,825 to 22,975, with 22,900 being the fulcrum. So all these option writers are expecting the closer the Nifty expires to 22,900, the more money they would make. So that's what they are largely positioned for. In terms of stocks, look out for BSC for the second day running, a lot of long positions being added in that stock. And Mahanagar Gas is the other one, which has seen some long positions being added.
Interesting. That was a straddle in today's FNO class.
Short straddle.
A short straddle indeed. And some flashes on your screen as well. Just before this one on your screen was L&T that was winning an order between 2.5 to 5,000 crore rupees. The stock appears to be currently at the flat line, but order win nonetheless for L&T, seeing some bit of recovery from the lows. But Ajit Mishra of Redicare Broking is joining us now. Ajit, good afternoon. Thank you for joining in. Now, how important is that 22,800 mark for the Nifty? Does it appear that a base has now been formed for the index and there will be some recovery, or do you expect this little bit of up move that you have seen in the index or in the broader markets to reduce your positions? And of course, couple that up with your stock recommendations this afternoon.
Yeah, good afternoon, Umesh. So basically, it's a tussle that we have been observing for last 4 trading session around 22,800 marks. So obviously, the bulls are trying hard, and but I feel that couple of observations that I have regarding the 2 key sectors, banking and IT. The both combinedly holds a weightage of roughly around 50% in the index. And if you observe in the last 4 days, we are not seeing any alignment between the two. So for any decisive recovery or a rebound in the Nifty, at least the alignment between these 2 indices is critical. The good part is that both are outperforming the index one way or the other. And we have started seeing some recovery or decisive recovery rather in broader indices in the last 2 trading sessions. So as of now, it's difficult to comment whether we are going to hold this. But yes, the alignment between the two definitely could result in a decisive rebound towards 23,200 to 250 area in days to come. Coming to the stock specific ideas, like what we are seeing as of now, that select pocket from the mid cap and small cap, they are also doing well. So basis that Chambal fertilizer within this fertilizer space, which is holding around its record highs after almost 3 months of consolidation, it looks for a set next leg of the up move from the current level, and 588 is what we are eyeing in the near future. So with stop at 530, one can buy Chambal fertilizer at current level. Another stock from the chemical space is what we like is UPL. The stock has experienced a reversal pattern formation after almost 3-4 months of consolidation. And now we are seeing a clear sign of outperformance from the current levels within the chemical space as well. So 715 is what we are eyeing in UPL from the current level. So with stop at 608, one can accumulate UPL at current level as well.
All right. Thank you for joining in and giving your views on the indices and individual stocks. With that, we'll step into a short break. Come back on the other side. We focus on Hindustan Unilever in our special Insight Edge segment. Welcome back. Let's get you some insight in our special segment, Insight Edge. And who are we getting this insight from? The biggest in the business from consumer space. Hindustan Unilever's Rohit Java said that macro factors are turning in favor of consumption. The stock, which is lower, has now just recovered and moved above the flat line as we speak, just around the flat line. And the reason why he says that is because, one, the budget measures and the RBI cut will create stimulus for consumption. What's good is rural economy is stronger versus what we've seen in the earlier years. And they are now seeing signs of better growth there. The company's been investing out there. There is a crunch in the urban consumption, as we've seen over the last few quarters. But, it is a couple of quarters away where there would be improvement. And the consumption economy will improve in subsequent quarters. That's the word coming in from the top boss at Hindustan Unilever. If you're looking at rural recovery and that being strong, what are you looking at? You're looking at names like Dabur, Marico, Imami, all of them outperforming in today's trading session. You're also looking at some of the value style retailers. You have Bazaar Style, which is up 18%, Vishal Megamart, a recent IPO, that too. So the ones who have more presence in tier 2, tier 3 and beyond, something we'll keep an eye out on. If HUL does well, some of its competitors do well as well. So pull up something like Godrej Consumer, that stock has moved to the high point of trade. So let's hear it from the horse's mouth himself. Rohit Jawa spoke to Shireen Bhan, and this is what he had to say.
Rohit, we've seen several changes happen over the last few months. We've got the budget delivering an income tax cut for the middle class, much needed. We've also had the RBI bringing down the interest rates. Do you believe that all of this is now going to provide the fillip that's been needed? Everyone's talking about the need for a consumption boost. Both the government and the RBI have done their bit. Do you expect things to take off? Are you starting to see any visible indication of that yet?
Yeah, the answer is yes, I do. I think the shift in the financial strategy started to shift towards more consumption from this budget and even the last one budget that came a few months back. I think all of these moves are quite material because we're talking of 30 basis points, around 30 basis points of impact of GDP. It's a large sum of money. It's definitely going to create stimulus for consumption. Importantly, I think maybe what's also helpful right now is that the rural economy is stronger. After many years of inflation and monsoon issues, I think this year the reservoirs are full, the agri-production is good, rainfall has been above average, and we can start to see already the signals of stronger rural growths than we did in years before. And I think the urban consumption crunch that we've seen the last few quarters might take a few more months or quarters to wane away, but that should normalize because it was on a high base. So I do think that given that the macro factors are turning in the favor of consumption, the institutional policies are beginning to bias that, and that some of the things that we can't control, such as weather, has also turned in our favor. And India will always remain a very underpenetrated, big headspace for consumption. Though I do think that as we go in the quarters going forward, the consumption economy or economy driven by consumption is definitely going to look better. How long it takes, I can't say. I'm not a soothsayer, but I'm optimistic, and I think that all the signals are positive at this point.
But it's still perhaps a quarter or two away.
We are not waiting for that, so we are already doing what we can do, which is go where the growth is and control what we can control. So we already have a deep rural infrastructure. We get to a very large number of outlets in the country, almost 70% directly weighted value distribution. So we intend to go deeper and also invest more. And we already have brands for rural markets that are absolutely have a great product fit. We are also relaunching some of our strong powerhouses like Lifebuoy and Glow & Lovely, some of our brands like Clinic Plus, Sunsilk, they're already quite strong. So yeah, I think we are not waiting, we are already investing to basically be ahead of the curve as things have started to sort of turn.
Welcome back. Now in our special offering, Fin Street, Abhishek is joining in to put the spotlight on how banks fared in the third quarter. Abhishek, over to you.
banking sector performance in Q3 FY25 was led by PSU banks. PSU banks outperformed private banks on key parameters like loan growth, net interest income growth on a sequential basis, asset quality, as well as return ratios. However, they lost out to their private counterparts with respect to net interest margin. But before we come to comparative performance between these two, let's take stock of the industry trend seen in Q3 FY25. So, Indian banking sector reported one of the lowest net interest income growth in last few quarters. So, deposit growths are coming in at a huge cost, and unsecured growth, especially for private banks, is moderating, thereby impacting the net interest margin of the banking sector. Sequentially, if you take a look, operating profits for the banking sector declined the highest in last 5 quarters. This was also due to the fact that treasury income was strong in Q2 FY25 for many banks. Profit after tax declined for the sector sequentially, third time in last 5 quarters. So coming back to PSU versus private banks, the net interest margin of PSU banks declined by 11 basis points quarter on quarter, and that of private banks actually improved by 4 basis points sequentially. Now, PSU banks had entered the low-yielding corporate segment in the last few quarters, which actually was vacated by the private banks at lower yields. So this impacted their ability to hold on to healthy net interest margins. Now, PSU banks have not been into unsecured lending in the retail segment over the last few years. Guess what? That actually saved them from asset quality woes. So for 5 quarters in a row, their quarterly annual slippage ratio has been lower than that of private banks. In Q3 FY25, the slippage ratio might be at historical lows for PSU banks at around 0.7%. PSU banks have outperformed private banks on asset quality. So gross NPA ratio and net NPA ratio of the PSU banks actually declined on a sequential basis in Q3 FY25, while gross NPA ratio and net NPA ratio of the private banks increased quarter on quarter in Q3 FY25. Loan growth of PSU banks on a year-on-year basis has been better than that of private banks for second quarter in a row. Now, private banks' loan growth is actually impacted due to slowdown in loan growth momentum that you are seeing in SDFC Bank. So, return on advances on an annualized basis has actually declined for PSU banks and private banks on a sequential basis. However, PSU banks have outperformed on return on advances if you take a look at the 5 quarters. So over the last 5 quarters, their return on advances has improved by 39 basis points when compared to 15 basis point decline for private banks. Overall, lenders focused in the microfinance sector like Utkarsh Small Finance Bank, Suryodaya Small Finance Bank and ESAF Small Finance Bank have seen their net interest income decline between 10 to 14% on a sequential basis and from +9 to -19% on a year-on-year basis. Now, these 3 lenders have seen massive operating profits decline. On a year-on-year basis, it's ranged between 27% to 56%, while on a sequential basis, it's ranged between 11% to 44%. Now, ESAF SFB and Utkarsh Small Finance Bank are the only lenders to report net loss in Q3 FY25 amongst all the banks. Now, pain is not only on the asset quality but also on the top line for some of the lenders who are actually focused in the MFI or microfinance sector. Let's take a look at the outlook. Now, loan growth may pick up in Q4 but may remain sluggish on overall basis. Liquidity deficit is coming down in the banking sector. Deposit growth may inch up a bit, but the cost of deposit will remain elevated. So you can expect the net interest margin of the banking sector to remain under pressure relatively more for private banks than PSU banks. Slippages will remain elevated, which can impact the return on assets for the banking sector. Valuations, they remain inexpensive but may remain at current levels until earnings downgrade cycle ends.
Abhishek, thanks a lot for that. A complete lowdown of how the banking sector fared in the quarter gone by. Take a short break. On the other side, Manisha Gupta joins in with Philip Newman, who is the Managing Director of Metals Focus. Stay tuned, back on the other side.
Welcome back. Another day, another all-time high is what we are seeing in case of gold prices. Who better to discuss that with Philip Newman, MD Metal Focus. Philip, hi, thank you so much for joining in. And 2024 saw its own string of all-time highs. 2025 really seems to be building upon that. And with more cues really as a background, the one major conversation point clearly has been the US tariffs. What impact do you see of that on gold prices?
Well, first of all, thank you for having me back, Manisha. It's good to be here. So I think there's a couple of factors. I think we are obviously seeing very large inflows into the CME vaults, so the COMEX vaults in the US. That really started after the election result, gathered pace or kicked off in December, and then really has ramped up in January and February. So that's had its own dynamic to play out. I think from a price point of view, I think the big play there has been the safe haven demand. We saw very strong safe haven demand last year, but that was really underpinned by the uncertainty, the crisis in the Middle East. This year, the safe haven is sort of from a trade standpoint, concerns about what tariffs Trump will introduce. So that is really underpinning that sort of safe haven driver that's really encouraging institutional investors to come into the gold market in quite a big way.
Philip, the other big news clearly has been the way US has been converting its futures into physical market, buying from Singapore and Europe in a large way as well. How are you looking at this? How big a market mover or a price mover is that?
Well, you've had over 600 tons of gold taken into the CME vaults. If you compare where we were a few days ago with those levels at the time of the election result on the 20th of November. So that's created its own pinch points. You've seen gold lease rates really shooting up. That has created stresses for the gold markets. And to your point, in terms of where that's been attracting gold into New York, the largest flow has naturally come from London. Much of that has been taken into Switzerland to be converted into kilo bars. But to your point, we've certainly seen flows from other jurisdictions as well. So that has created some shortages in those markets. But I think a really important point, Manisha, is that we're not saying there's a shortage of gold in the market. It's just a question, is it in the right form, in the correct location?
Absolutely. As we speak to you, Philip, it's almost 2950 on the screens when it comes to gold prices. So all-time highs yet again in a few minutes. There also have been reports, Philip, about queues outside London Bank to take gold. We understand in a market like this, there are various rumors as well. But how are you looking at demand now, demand especially in UK?
So I think if you're talking about pure retail demand, I think that has been quite mixed. We actually had a really interesting situation. As you may know, we had a change of government last year, and there were concerns in terms of their requirement to raise revenue, that they would impact certain taxes, and in particular one called the capital gains tax. That led to a rush to buy certain products in the UK, which was CGT free. So that was a really interesting dynamic that played out. But I think moving away from the retail side in the UK, something we have seen has been the delays, as you may know, in terms of getting gold out of the Bank of England into the commercial banks' vaults to therefore be mobilized for those flows into New York. So two very different strains or very different dynamics playing out there in London or in the UK.
Oh, well, absolutely. Philip, we do understand that much of this gold that is getting into US is for the Feb expiry, where major banks are delivering gold rather than closing their short positions. After Feb expiry, do you see gold prices get some sanity back, or with the kind of global uncertainties that we are dealing with, you are looking at gold prices continuing higher from here? 3,000, 3,200 are the next targets coming in.
Yeah. I mean, I think, what's driving this, of course, is, as I mentioned earlier, the uncertainty about tariffs. Do we think we're going to get that certainty in the coming days or weeks? I think that is unlikely. it seems to be a starting bargaining tool for Trump. He feels he's had some success with that. So that suggests that will continue. If that continues, the uncertainty doesn't go away, and therefore maybe the requirement to keep gold in the US carries on. I mean, will it carry on at the same pace that we've seen over the past couple of months? I think that's really hard to say, but I don't think it's necessarily going to stop. I think what you would say, though, is if there was clarity, and as unlikely as that seems in the short term, then maybe that reduces the requirement to have, that gold, a lot of that gold in New York. And maybe at that point, we see some of that then return to London. But that does seem a way off for the time being. But I think while the uncertainty also persists, then, it looks like further upside is likely. $3,000 is just a heartbeat away now. I think at that point you could see a correction, you could see some profit taking, but maybe that will be temporary, and then maybe that upside then resumes after that.
Shining bright is gold.
But I just want to understand from Philip that after 3,000, does the world open up for 3,200, 3,500? What are we looking at on the higher side?
Oh, gosh. I think what you would see, though, is I think there are people from a retail standpoint, again, speaking to my colleagues in Mumbai, where the retail investment hasn't been that great. There are, I think, people on the sidelines waiting for further upside. I mean, the gold price now is about 86,000, give or take, excluding GST. I think the talk in the Mumbai market is they're waiting maybe for 100,000. That seems, I think, perhaps a bit of a stretch. But I think you will see significant levels of profit taking. I think even from a recycling standpoint, I think there could be heavy liquidations of jewelry. So I think there will be a lot of selling into that level. But yes, further upside could be on the cards beyond 3,000. We are, well, I guess you could argue we've been in uncharted territory for over a year now. So it is really quite dramatic and exciting to be living through.
100,000 is a bit of a stretch, but never say never, as they say. But Philip, thank you so much for joining in today. Manisha, thank you for joining in as well. With that, it's a wrap on this edition of Halftime Report. We leave you with the Nifty almost into positive territory now. Business lunch for the next 30 minutes.